Welcome to Reverse Mortgage and Beyond, the podcast where we take you inside the world of reverse mortgages. I'm Cheryl Scheidell, and I have been in the mortgage industry since 2002 and have specialized in reverse mortgages for the past 10 years. We'll cover topics like reverse mortgage basics, purchasing a home, and the myths about reverse. You'll also hear from some trusted referral partners. Let's get started. Hi, everyone. Welcome back to Reverse Mortgage and Beyond. I'm your host, Cheryl Scheidell. I'm with Barrett Financial. And I just want to say right off the bat here, I also have a radio show. I want you to check in at AM 960 The Patriot on Sundays, 3:30 p.m. Arizona time. And you can listen to some past podcasts there or on Spotify. I have some basics about reverse, the misconceptions, how to purchase a home with reverse. But I also have referral partners. One of them is joining me today, Miss Betty Pecha. Then I also have had, in-home healthcare, other types of referral partners, from roofers to moving companies to organizers to Hospice of the Valley to mobile doctors. So definitely check it out. I just want to be a resource to my community. But today I'm really excited, because, I bring you trusted professionals, practical guidance, and conversations with local trusted individuals. And Betty Pecha is here with us today. She's with A&M Futures. And I'm just excited to have her to educate us on, finances and retirement. She's a financial educator and retirement strategist who works with people as they approach and move through retirement. So we're going to talk about that. But go ahead and give us your background, Betty, so that
thanks.
way we can learn.
I started out in the world, the legal world, worked my way through compliance for New York Stock Exchange and NASDAQ company, and decided that was really stressful.
Really?
But that I really like working with people, especially women that are going through transition, meaning if they're going through divorce or recently widowed, because those seem to have a target that no one really cares. They just want to push them through the system. And
Yes.
and I want to make sure that they're educated, they understand what's going on, and we can help them move forward.
Yes. And I work with a lot of widows, and some of them just don't know how to handle their finances.
Right.
But we'll get into that as we go along here. We got that silver tsunami coming up, and but let's just, you're working, when we just talked about widows, but also silver divorces.
Mm-hmm.
I just had somebody that did a reverse mortgage. She got a divorce at 81, silver divorce.
Yeah.
And it was her second marriage, but she had to get the reverse mortgage to pay off her soon-to-be ex-husband, but she used the reverse mortgage to do that. So I was able to help her out, but it's just sad that we're having to do that. And then we've got our widows. I have several people. Unfortunately, we're all getting older. And I've had some people call me, and they're dealing with, their spouse passing away. And so that's why we're here with Betty today. So I'm just going to start off by saying thank you for coming out and helping us here. And you work with people approaching retirement.
Mm-hmm.
And I know you're often asked the question, what really makes people stop and think? Can you share with us, what is important to do right now as they approach retirement?
Sure.
We'll start there.
I can, but I'm going to add one thing to your gray divorce.
Okay.
Remember that a 50-50 split is not necessarily the most advantageous.
Okay.
Just because it's 50-50 on paper
Okay.
doesn't mean 2 years down the road that it's even split. You really need to look at the different types of accounts that they have.
So we're talking counts, not houses. So got
Right.
it. Okay.
Right.
Okay.
So,
That's important.
but the house part is part of that.
Good point.
So, okay.
Good
Sorry.
point. No. I'm glad you brought that up because people don't think about that.
No, they don't. I always thought 50-50, that's the way to go. And it's not.
Okay.
So
okay.
you got to really look at that on paper.
Okay, good.
And that goes with hand in hand with one of the questions I always ask everybody is, do you have a retirement plan or do you just have tools?
Right.
And they're like, oh, well, I have a 401k. I have maybe a pension, an IRA. Those are all tools. They're not a plan. So we need to look at what that plan is. Just like with the divorce, you have to see where it's going to be for you 20, 30 years down the line.
Okay. Okay. So why do you think so many people assume having those accounts means they're ready?
Because when we go into our careers, everybody tells you to accumulate. And so we do a good job accumulating, but nobody tells us what we're supposed to do with that, how we're supposed to use those funds when it gets to time for our retirement. So it's kind of like we're showing up, I have this 401k, but then what happens if you need something else? What happens, it's okay. So you're going to build a house. You show up with hammers and nails. Oh, yay. But the problem is you need the blueprint.
Right.
So you can actually build the house.
And create the foundation.
Exactly.
And start from that. Okay.
Exactly.
So you help everybody create the foundation.
Yes.
So what are the biggest things people forget to think about?
The biggest things that they forget to think about is I call it sequencing.
Okay.
So when you have your accounts together, by what I mean by sequencing is you're not going to necessarily pull money just from one account. Mm-hmm. You have to see how that affects your taxes.
Okay.
And how it affects longevity and go from there. So that's the biggest thing is to pay attention to is looking at that sequencing and the type of account that it is. Is it a qualified account? Is it a non-qualified account? Meaning they're both taxed differently.
Okay. So do you want to go into that and explain
yeah, sure, I can.
A little bit about that?
So a qualified account, which is your 401k, your traditional IRA, with those accounts, they're tax deferred, right? Okay. And everybody thinks that's great.
Yeah, I was always wondering. I'm like, I'd rather pay less taxes now, right? Because the taxes are just going to go up later.
Well, you got that crystal ball that shows me that. So I don't know, but
have they been going up?
Oh, absolutely.
Okay, just say it.
And right now we're in one of the lowest tax brackets we've ever been in.
So that's good.
Right. So you want to pay your taxes now,
right?
Because when you get to retirement, taxes may be higher. Right. And we also think, oh, well, I'm in retirement. I'm not going to get taxed on so much. Well, you don't have as many deductions either.
Good point. So people don't think about that.
Right. They don't think about that. So when you pull out that money out of your account, of your deferred account, your qualified account, you have to pay the taxes on it.
Okay.
Okay. And then you also have required minimum distributions. You have to do that. But with a non-qualified, when you pull money out of their account
so what's a non-qualified account?
So a non-qualified account is kind of like, let's say we put a lump sum into an investment account. Okay. We tagged it as not tax qualified, so it's non-qualified.
So is it an IRA, a 401k, a Roth? Are those the qualified ones?
A Roth.
A Roth is
your best. Well, a Roth is actually... A Roth is actually an extra type of animal that you pay your taxes now and you don't pay any taxes later. That's the best thing you can have. Okay. But there's also qualifications for being able to have a Roth, how much you can put into a Roth. Okay. Whereas there's with other types of non-qualified accounts where you put the money in now, you pay the taxes only on the growth. Okay. Whereas a qualified, you pay the taxes on everything because you didn't pay any taxes up front.
Right.
So you're non-qualified. You usually start it with money out of your savings account or your checking account so that the taxes are already paid on that money, right? Right. Yeah. So then you're good. You only have to pay the taxes on the growth.
So as people are starting out and moving, when they're starting out and they're doing all the things they're supposed to be doing and getting the 401ks and all of that started, should they be doing a combination, doing the 401k and then something that is after taxes and growing for them, right? So a combination.
Absolutely. You want to have a combination, and that helps with your legacy planning too. And then there's you can use different types of permanent life insurance that will be 100% tax-free.
See, this is why you need to call Betty, because she knows what she's talking about. Okay. So,
well, and all of a sudden I forgot his name. One of the co-founder of Nike, multi millions, and he took money out of his permanent life insurance policy. Okay. I'm talking like $54
Million?
six digits
Okay.
plus,
Okay.
a couple,
So he took money out of that.
yeah, and never paid any taxes on it.
Okay.
But then he left a legacy for his loved ones, which was multi-millions tax-free money. So you just need to know how to
it's
do
education.
it.
See,
Yeah.
I'm in finances and I don't want to know all this stuff. That's why I talk to Betty. Okay. So tell me about the gardening analogy.
I like the gardening analogy because people understand flowers and plants and things like that. So your financial tools, that whatever type of tool you want to use, the 401k, the IRAs, non-qualified or qualified,
Right.
those are your seeds.
Okay.
All right.
Okay.
But just because you have seeds, if you are you going to take them out of the package or not? We don't know what those seeds are going to lead for the harvest.
Or how big they'll grow.
Exactly.
Okay.
So there's no guarantee. And so then you have to look at the gardening as to how you're going to, and that's where I was kind of talking about the sequencing.
Okay.
So you don't plant every type of, you have perennials, you have annuals. So you have to look at when you want to plant them, how long is it going to take it to grow,
Okay.
so that it meets your needs when you're in retirement, because you're not in retirement for 5 years.
Right.
You're right. Most people are in retirement for 20 or 30 years.
Right.
And so you need to take that into consideration. And that's how you also can called laddering, where you can take that and you can take your accounts, pull the money out from this account so that you have that monthly income coming in. And then all that one gets slightly depleted. So you click in another one, and then it just keeps you going for the entire time you're in retirement.
Okay. So do you feel, this is off topic, but do you feel more people are working longer because they have to, because they don't have the funds to retire? Because I have people in their 70s still working.
Right. And that's unfortunate.
Yeah.
Our world has turned into, at least in the United States, where you're working until you're 75, 78. And
there's pros and cons because it keeps your mind active. It keeps you, young.
Right. But you could go volunteer somewhere.
That's true. I agree. That's what I'm saying. So there's pros and cons about it.
Right.
We don't want to have people be the greeter at Walmart if they don't have to be. Right.
Exactly. And even when you're looking at Social Security, Social Security, don't touch it to your 70s, what they're saying, so that you have, and it actually makes a great big difference on what that monthly check's going to be.
So that's that distribution you were talking about.
Right.
So when is distribution now? What is it, the age now?
I didn't look that. I know that. So it's different for everybody.
Okay.
It's not always the same. It
and
depends
different accounts and stuff like that.
I thought you were talking about Social Security.
No. For distributions of a 401k or IRA, do you have to take certain distributions at certain times?
No, you can take them
at 70 or something.
So you have your required minimum distribution.
Yes, that's what I'm talking about.
Okay, so
I didn't know how to ask it.
Okay, so your required minimum distribution, which I think is not right. That's just my personal opinion.
Okay.
Because it forces you to take out that dollar amount. And again, that depends on, it could be 65. It could be older.
Okay.
But for that required minimum distribution, if you don't take it out, the government will penalize you and add tax on it. So then you have to take out that amount.
Why do they do that? I don't understand. I'm learning here too today, guys.
It's because, and it was 50%. Now it's down to 25%.
So that's good.
Well, yeah, but 50%
bad,
of, 50%, it still can be a whole lot.
Okay. Good point. Okay.
Right. So you have to pay and then if you're married, if you and your spouse make more than $44,000 worth, cat or income during the year.
Right.
And half of your Social Security is added into that amount.
Okay.
Then your Social Security benefits, up to 85% of your Social Security benefits can be taxed.
So that could be why sometimes I have people on Social Security that have to do income tax returns and some that don't have to.
Right.
Sometimes.
Because they're getting their Social Security distribution, but they're also getting money from another source. So your IRA and your 401k is another one of those sources.
Wow. Okay.
So that's another reason you want to look at non-qualified or using life insurance, because that does not add to that.
Yeah, life insurance is a good one. It's the best. I feel like just a secret, like a best guess secret.
Right.
Wouldn't you say?
Oh,
Life insurance?
absolutely.
Yeah.
Absolutely.
Yeah. So tell us more about healthcare as the soil. Let's talk about the garden and
because so
healthcare as the
if
soil.
you're not healthy,
Right.
you end up with doctor's bills, right?
Right.
So even though if you have health insurance, you still have to pay for prescriptions. You still have all those out-of-pocket things. And so if your accounts are not flexible,
Okay.
then how are you going to get money out to pay for those bills?
Besides a reverse mortgage. Just kidding.
Right. So
I just had to put that in there.
But that's the whole point, is you need things that are
Because somebody might not have a
liquid.
house to do that. Exactly.
Right. But
Yes.
I mean, no, but that's a liquid account.
Yes.
So you need to make sure that you have liquidity somewhere.
Right.
And I'm not saying put all your money into a savings account, because you're not getting any money, but you're not making any. Your money's not working for you when it's just in a savings
Right.
account.
Yes.
So yeah, that's exactly what that all boils down to, is making your money work for you, but make sure you have liquidity, because guess what?
Yeah.
Those bills will show up.
Yes.
So
yes.
you need to know where it's going to be coming from.
Yes. Yes.
So
yes.
that's all the whole thing about having the right tools along with the plan.
Right. No, that all makes sense. Well, and I have a lady, and I'm going to introduce her to you. She unfortunately had a really bad car accident, and she's going to be getting a settlement, and she doesn't have anybody to help her with how to handle that. Because I was talking to her about a reverse mortgage, and I said to her, listen, I don't want you to be house rich and cash poor, so I don't want you to dump that into your house. I'd rather you talk with Betty and learn where you can put this money, and she'll help you make it grow for you for your latter years in life. So, but that being said, that's my little client story that I have for a referral for you. But tell us some stories that you have that you can share with us today.
Yeah, I have clients that most people do their best at savings, because that's what they were taught to do. And they really do it, and they feel like they're prepared. And then, I got a text yesterday, and someone walks into my office, and I'm just like sitting there, and they're like, "What's wrong?" I'm like, "So-and-so has cancer. She just got, we're not quite sure where it is." And she just sent me a text saying,
young too?
She's, you know what? I think so.
Yeah.
She's 74.
Yeah, that's young.
Yeah, these days that's young.
Yes.
And she's like, "Do I have a cancer policy? Do I have?" And it was interesting, because I'm like, okay, I know this woman. She's a very intelligent woman. And all of a sudden she forgot all about her plan.
Aww.
She couldn't remember what she had. And so we want to make sure, well, anyway, so she's going to be fine, her. But if you're not, that's when you start making decisions that aren't thoughtful, because you're making these decisions based on emotion. So then you're pulling from the wrong account at the wrong time.
Right.
And so that's why you really need to have that plan, because then you can look at it and go, "Oh, I'm okay."
So if this happens, this is what I do. If this happens, this is what I do.
Right.
So that way my consequences are going to be positive and not negative.
Right.
Right.
And I'm a strange bird, and I know it comes from my legal background, that I draw pictures constantly. This is what we have this plan for, or this account, and these are the reasons we have it.
Okay.
And
good.
so that
You spell it out.
Right. And so they always have that with them. They just have to open up the little packet that Betty has.
If this tragedy or something happens, use this account for this. If this happens, use this account. Oh, that's clever.
Yeah.
That's
or if
good.
you want to go on a vacation.
Right.
This is where I can pull it from, and it's all good.
Well, and, just to let people know, I help financial strategists and advisors help keep money under management with people getting the reverse mortgage, because, they're taking the money out of their house to do the incidentals like getting a new roof, take the grandkids on memorable vacations, age in place. Maybe the house has to pay for somebody going into memory care. So if somebody has to pay for memory care, let's use the money in the house. You're living in your piggy bank that you've been paying into. Let's keep the money under management with people like Betty, and then use the house to pay for these other incidentals. So this is why Betty and I work together so well.
Well, right. And that's why people forget that their biggest plant
Right.
is their house.
Yes.
So look at it. That's when you need to decide early on, are you going to stay in your house? Or are you going to downsize? Or are you going to move to a
assisted living?
Yeah.
Or independent living?
Independent. Right.
Yes.
But that's where you need to make your plan so you know what you're going to do. So if you end up in the hospital, and this is from personal experience, and you're at the hospital and they said, no, you can't go home.
Yeah, that's scary.
That happens a lot.
It does.
And so then you're all of a sudden you're moved from the hospital to an assisted living of some sort, and your family is scrambling.
Yes, hair on fire.
Yep, trying to figure out how to.
Or the people say, no, I'm going home. And they've been making the cycle through acute care. They go home, rehab, they fall again. Because I had a client that was referred to me. She should not have gone home. And she went home and then she fell. Fire department had to come and dig her out of her lazy boy. She was stuck, arm turned blue, all the stuff. The neighbor came to check on her. Thank goodness. And, they had to sell the house and she had to go into assisted living. So that's a tragedy there. But okay, so we're painting the picture here. What happens when someone doesn't think about these things ahead of time?
Stress.
Right. Okay.
Lots and lots of stress.
Right.
And the whole thing is it's just simple. Have the plan, know where your income is coming from. Because when you stop that job, your income stops, your paycheck stops.
Right.
Well, we want to make sure that you still have a paycheck coming in monthly, and you need to know where it's coming from.
And we want to have the lifestyle that we're used to living.
Exactly.
Right.
Exactly. And you need to plan, like I said earlier, you need to plan because you have to pay. I'm sorry, you're still going to pay taxes. The government wants your money.
Yeah.
One way or another.
They're always going to get their money.
They're going to get their money.
Yes. Yes.
And, that's why I always say, too, to talk to somebody about what are you going to do with your house?
Right. Exactly.
Right.
Exactly.
That's the whole idea about the downsizing or keeping it or moving it or whatever you're going to do.
Yeah. And, I'm really honest with people when it comes to that because I have a lady right now. She has a reverse mortgage with me and she's just trying to decide if she should stay in that home or if she should downsize. And I was talking to her literally yesterday and I said, I'd love to do your loan again, but I feel like you're in the best situation is to stay in your home. And she goes, okay, I love my home. I don't want to go anywhere. And so she's having an appointment coming up. And so she's going to stay in her home. But I was just like, we want to do what's best for our seniors. And that's what we're here today is just educating.
Right.
Yeah.
And that's so funny because we were talking about life insurance as a way to have this tax-free money also. So a lot of people will use their savings that is built into their permanent life insurance and their reverse mortgage, and then they can have a wonderful, wonderful retirement.
Yes.
So.
I mean, if they just remember that they've been paying into their house, it's like a piggy bank. It's a savings account. We like to call it a wealth building tool.
Yeah.
Your house is a wealth building tool because, so I had a lady purchase a home with a reverse mortgage and she wanted a 30-year fix. And so I gave her the numbers on a 30-year fix. And then I said, okay, let me show you the reverse purchase. And she's like, I don't want that. And I'm like, let me educate you. The next day, she calls me back. She's like, I want that. And I'm bringing this up because she got the reverse purchase. She didn't have to make a mortgage payment. And I said, what changed? She's like, well, if I don't have to make that mortgage payment, the $2,000 a month I would have been giving to that 30-year fixed mortgage payment, I'm giving it to my financial strategist to invest for me. And so I'm like, good for you. So that's what she's doing. So you can use your house as a wealth building tool.
Absolutely. And I remember the name of the co-founder of Nike that was Phil Knight.
Okay.
Yes. Google him. Okay. It's amazing what he did. And
this was with the insurance policy,
I can show you exactly what he did.
Okay.
Yeah.
Okay. So we've talked about housing. How does that fit into the garden? Our analogy of the garden.
Yes, that was the biggest asset. Okay. That's what we were talking about. Yes.
Okay. And so for someone listening today, where's a good place for them to start?
Well, I wrote down 4 questions that I want them to ask.
Okay.
And the first one is, do I know how long my retirement might realistically last.
Okay, yes.
And so that's a good one because, like I said, most people don't think it's going to last 30 years, but we have longevity on our side. So you need to plan for that. The second one is, do I know where my income will come from and in what order? That's what I was talking about, either the laddering or the different types of accounts that you'll be using.
Okay.
Have I thought about taxes, inflation, and healthcare together? Those are your three biggest risks. And most of those, all three of those are out of your control. Well, the healthcare, keep yourself healthy and that will help.
Right.
But you don't know what's going to happen with the price of insurance, the price of medical, or any of that. So those are out of your control. So you just
I know the price is going up. That's what I know. My crystal ball is telling me that. And that's what's going on.
Yes. And the last question is, do I understand which resources I'd use first if life changes?
Yeah.
So,
it's a good plan to have in place for sure. And, we didn't even talk about it today, but I'm going to take a little side note here.
Sure.
You and I deal with people in their later years, but POAs are important, everybody.
Oh, please.
POAs in Arizona, there's 3 of them. You have to have financial, power of attorney, medical, and mental. The other big thing is make sure you're updating your trusts. And I know you have a story on that, so just hold on for that. But I wanted you to share that story about updating your trusts and funding the trust. Unfortunately, there are some companies out there, you'll get a trust, but then they don't fund it for you. And then people will get to the end and they're like, well, the trust never got funded with the home or the assets, or, there's so many crazy stories out there.
Right.
But let's hear your story.
And you don't want to go into probate.
Correct.
So, and most of us have nice cars. We like cars. Go down to DMV and have them put on your car transferable upon death.
Oh,
that it will go into your trust.
Okay.
That is super important. On your bank accounts, have payable upon death.
Yes, POD. Right. Okay. Yep, I did that with my dad.
Those are just so important, and we just forget about it.
Yes.
And I like being a connector, as you know.
Yes.
If somebody needs help finding the right attorney.
Yes.
For estate planning or divorce, let me know.
And also, just really quick on the trust. So we took a trip to Europe, and my mom's like, well, we're all on the trip. We need to update the trust. And I'm like, what do you mean update the trust? And she's like, well, if we're all there and something happens to all of us, I need someone else to, and I'm like,
that's a really good thought.
And I was just like, okay, so I didn't even know about updating until my mom's like, we got to update this. So I'm always learning too. And this was years ago, but
and your POAs
update every 2 to 3 years.
Yes.
And have it reviewed because
life changes.
There are people that have trusts that are 20 years old and have never been looked, and people have changed spouses, people have passed, right? So that's so important.
So there's another thing that so this is my divorce person coming out. I'm not even divorced. I just help people who are divorced. So on life insurance policy, if you want to make sure that they're going to be able to pay child support and or spousal support, you can go on and you can have an irrevocable beneficiary made. Okay. So that money can be used to pay for the support for either the child support or the spousal support.
After you're gone.
After they're gone.
Okay,
after they're gone.
Okay.
Number one key, have that life insurance policy done and ready to issue before the divorce is finalized. Because what if they go to do it after the divorce is finalized and they don't qualify?
Wow.
Yeah.
That's good information.
So.
Did you hear that? Good. Okay, I'm looking at my notes to see if I have any other thing. Is there anything that you'd like to add? One last thing that you'd like to add for our listeners?
No, my big thing is just become educated.
Yes.
Everything is changing. I just ordered a new book on the new 2026 Social Security rules because everything just continually changes. So you have to make sure. And what you think is in place this year isn't necessarily going to be in place next year.
Right.
So,
Right. Just like all the health care stuff changes every year.
Right.
All right. So how do you want people to reach you yes.
I'm at A&M Futures, and my direct phone number is 602-524-9230. And my email is Betty at amfuturesllc.com. And reach out to me. I'm more than happy to do a quick chat to see, where
Perfect.
you're at and see if I can help out.
Excellent. All right. Well, Betty, thanks for joining us today.
My
Your
pleasure.
expertise has been incredible, and it's always great to work with you. So if today's conversation resonated with you, don't wait and call now and, get your questions answered with Betty. Plan ahead, create options, get peace of mind and better outcomes for everybody involved, because, we want to plan. We don't want to have our hair on fire. We want to plan ahead, right? So when it comes to the financial side of aging in place, whether I can help you with a reverse mortgage or connect you with people in my sphere of referral sources, go to reversemortgageandbeyond.com to reach out to me. Go to my phone number is 480-817-4324. And, we just want to be here and be a resource to you. So thanks for joining us. Make sure you subscribe. I'm learning how to say that. Subscribe so that way when more of these episodes come out, you'll learn more about us. All right. Thanks, everyone. Again, this is Cheryl Scheidell, NMLS number 886425 with Barrett Financial, an equal housing lender. Please remember that loan programs, rates, and eligibility guidelines are subject to change and may vary based on individual circumstances. Nothing discussed in this episode constitute a loan offer or credit decision. Any examples or scenarios shared are strictly for illustrative purposes. All loans are subject to credit approval and underwriting conditions.